down. You said, I'm feeling better about this market. And why are you feeling better? Because there are a lot of issues out there, Tom.
That's right. I know the Fed's got a tough job, and I think all of our clients are just watching inflation prints and nervous about Friday. But it looks like a lot of things are happening around the economy in the world that are helping the Fed. And I think one of those is that I think there's a lot of goods that are going to start seeing discounts, both cars and apparel, furniture, everything Target and Walmart have. And now I think housing is cooling pretty dramatically, and that's going to lead to both job loss and some wealth effect. And so I think the Fed has the market doing its work for it, which means investors don't have to worry about hawkish surprises.
Still sticking to your choppy now, but strong second half of the year, and we can reach some levels that look, at times unattainable, to be frank.
Yeah, that's right. I think a lot of folks think, hey, look, the S&P won't see 4,800 again for 5 years, but we have to realize there's some bullish themes really coming together. One is the labor market is creating wage pressures, and that's solved with technology and automation. That's great for tech. I think eventually the war ends with Russia and Ukraine, and then we have a post-construction build and commodity prices fall. That's really good for U.S. companies. And now that stocks have come in, I mean, tech is cheaper than it was in 2003 after the dot-com, and there's been a real loss of faith in owning some of these names that are important. So I think there's a lot of upside surprise. You
don't have any concerns whatsoever about oil pushing towards 130, nat gas pushing towards $10. I mean, we can stop there, but then I would continue and say the very stocks that you like so much, these large cap technology stocks, earnings are, I feel like, suddenly in question. Microsoft told you what they did. There are now concerns about what Apple might deliver as a result of the services business. Intel, not that they're in the same ballpark, obviously, as Microsoft and Apple, but you catch my drift.
Yeah, I do. Nobody wants earnings cuts. I think that feels like it's another leg down for folks. But I think the surge in oil is almost a barometer of the progress of the war. So I think as long as there's war, the OECD had a great report today showing that half of the inflation surge this year is really war-related. And once the war comes to a conclusion, I think we see oil and food prices really start to disinflate, but it's painful now. I don't think that means tech has downside. If we have estimate cuts, but a lot of it's priced in, then it's just a risk-reward question.
Why do you believe it's priced in? I mean, that's critical to suggest that it's priced in. Because I'm pulling up. You think about your answer as I pull up Microsoft at 270, and I've got Apple. Can't get back to 150. It's at 148.
Sure.
So what about that?
Well, I think Microsoft is not that far off from where it was when they pre-announced some of the FX impacts. Facebook, maybe 10 days ago, had COO depart. Facebook's higher than it was there. So I think we might have a one-day effect, but the stocks are drifting higher. And that tells me a lot of bad news is priced in. And in fact, there's quite a lot of tech insider buying as well. So I don't know if executives would be buying stocks if they thought there was a 30% haircut coming to estimates, but maybe something.
Let me ask you this. If the Fed hikes by at least 50 basis points in September, does that throw off your target for the end of the year?
Yes. I mean, to the extent that if the Fed had to do 50 because inflationary pressures are accelerating, that would put a lot of risk to a thesis. But on the flip side, I think that goods prices are deflating fast, and I know there's pressure on services, and I think CPI is everyone's concern. But if inflationary pressures are tracking to what the Fed is think are better, I think markets rally. And that's kind of what we're leaning, that I think the market's overshot and are really focused on the left tail, that we have a hard landing coming. If we have a growth scare, stocks are attractive.
And you don't think that we're going to have a recession?
I mean, eventually there's a recession. There's always there's a recession every 5 years. So in any single year, it's a 20% chance of a recession. But do I think it's more elevated than 20? Maybe, but I think stocks have priced in almost a full-blown expectations that alarms markets. And if we're on a glide path towards 25, even 50 in September, but it's because they need a few more prints of improving data trends, I don't think that scares markets as much as they need to go to 75.
You still sticking with Bitcoin?
Yes, I think Bitcoin is, first of all, acting far better than people expected. People talk about a crypto winter, and the last crypto winter was 2018, and Bitcoin was down 90%. Bitcoin's down 50, and it's already called a crypto winter. There's big job cuts coming from Coinbase, and Bitcoin is still holding at 30. So I think it's acting far better than people expect. And again, it's it's a risk-on asset. So I think to the extent the NASDAQ and Bitcoin rally, it's helping us be more comfortable that the market's already bottomed.
But I mean, there was a suggestion not even a suggestion. I mean, the proof was in the pudding. You looked at the correlation between the NASDAQ and Bitcoin broke down. It was non-existent a week ago. That you don't think that correlation has broken down? Right? There were days where the NASDAQ rallied, Bitcoin was still down.
Yes, and Bitcoin, I think, took some gut punches because of what happened with Terra and some stable coins, and there are other reasons to sort of think Bitcoin is affected by things like China reopening. But to the extent that China normalizes, that means income flow back into Asia. This year, during Asia trading hours, Bitcoin's been down, so that dynamic can change as China's economy opens. And I'd say even if the correlation changed for a few days, it doesn't mean that's really a change in the relationship.
If the S&P is going to 4,800, where's Bitcoin going by the end of the year?
I think Bitcoin is going to make its way to flat for the year and possibly up.
Tom Lee, you're not afraid to make bold calls. And we like to hold you on them, too. I appreciate you being here.
Great to see you, Scott.
All right, that's Fundstrat's Tom Lee joining us here in Overtime. To our Twitter question of the day now, we want to know what will be the best performing sector in the second half of the year. Will it be Tom Lee's tech? Will it be energy, financials, or something else? Head to @CNBC Overtime on Twitter. Cast your vote. We will reveal the results at the end of the show, as we always do. Up next, finding opportunity in retail. Our next guest runs a fund specializing in that space. We'll find out where he is finding real upside in 2 minutes.